Hey everybody, how you doing? Tom Willard here, Tom Willard Trading, following up on a few ideas and doing another lesson on a fantastic trade that I took off an idea I tweeted about, and I wanted to share exactly what I was looking at and how I traded it both as a day trade and as an overnight hold. So let's get to it. First up, CENX, wanted to follow up on this one. Mentioned it as a long idea in here, came down, had the failed breakdown, popped back up on earnings, couldn't break up higher, pulled back, came back up here, retested that area, put in some topping tails, is now pulled down. I tweeted about this a couple days ago that it was down here near support. Now notice that the low on this breakdown was at $12.35. It didn't quite get there. 1252, 1261. Look for it to hold in this area. If it breaks lower underneath this, okay, it could be moving for quite another move. Okay, you got a flat 200 here. You've got some support in this area, but it's from a little over a year ago, okay, and it's moved quite a bit since then, both up and back down. So that support may not hold as well. It's been basing, and like I said, I liked it long here when it was more extended from the declining moving average, but that's starting to catch up. It still is quite a bit of ways away. I think this has upside potential. If I had to pick which direction, I would still lean long on this, okay, but you're not getting a setup. If you bought this pullback, okay, you either made small profits if you trail stopped it on the daily chart, or if you pivot stopped it, then you got stopped out for a loss, okay, which is fine. I'm still interested in this long. I actually own call options on this particular stock at this point, okay, looking for a move up here. All right, so watching it now, obviously, if it breaks below 1235, we look at the weekly chart again, I'm going to bail. I'm going to sell out on my call options, okay, and look forward to, like I said in the last video, that if this continues to base here longer, it actually becomes a better short idea than a long idea. Although right now, because of the still extension, the hold here, the retest this area, if you want a low risk trade, you know, one thing is to look to buy it in this area here and keep your stop real tight at 1230, 1235 area. So you're only risking 35.40 cents. Now, remember, we could all wake up on Tuesday, come to the market, and this thing could be at $5 a share, or it could be at $25 a share. As you know, overnight things can happen. They can gap. So, you know, don't go nuts on overnight holds. If you're holding something overnight, don't go nuts on your share size. If anything, go err on the side of conservatism is my suggestion, because things can gap against you poorly. And it can gap in your favor too, but again, then you're gambling, right? Day trading is a little bit more safe in that, you know, unless the stock gets halted midday, you've got a situation where, you know you're going to get out near or around your stop area or your target area, okay? And, you know, come the last 10 minutes of the day, you can just get out if it's not hitting either one. I've done that before where I get in, I set my target, I set my stop. It doesn't stop me out. It doesn't hit my target. It's somewhere in between. It's a profitable trade. So then I got to go, okay, what are my rules? Do I want to hold this overnight or do I bail? Okay, and I'm going to talk about Sprouts Farmers Market a little bit later in this video and kind of show you what I did, because that really pertains to that exact concept and that thought process around holding overnight versus day trades. Okay, so this one, again, not looking that great from a long perspective. I'm still leaning long on it. Okay, got a small position on it long. Getting out though if it breaks below this 1235 area. Okay, whether it's Tuesday, Wednesday, Thursday, or whatever, and may look to pick up some shares here in this area with a nice tight 30-40 cent stop, but then reconsider if I get in on Tuesday, by the close of Tuesday, saying, look, do I want to carry a big position into Wednesday where it could gap against me, or do I want to just whittle it out, knock it down to a smaller size, or just bail completely and look to get in again possibly on Wednesday if it sets up, okay? So going to be looking at that for next week. Now, KEG, you know, as I said, it's a dimer, and surely it is behaving like a dimer. You know, you've got the cup with handle here. It broke out. It moved higher, okay? Came up, topped out here, pulled back, and in a sense, it's pulled back and popped up here. Notice the volume picked up a little bit. The volume on the pullback here was lighter to the rising moving average. Again, if you're long in this thing, you may be out for a small profit, depending on how you manage your trade. Or if you've got, you know, if you got in here where I suggested with your stop down here about $2 a share, then you're still in if you're a set it and forget it type of person, okay? Like I had mentioned, okay, it came down quite precipitously, higher low on the weekly chart, moving its way back up, okay? It's working off the little bit of extension here on the weekly where it's up multiple weeks. It just took out the prior week's low, which is good. It cleanses, okay? And like I said, $4 is not too far-fetched for this thing. as a move back up. It may take a few months to get there, okay? But keep that in mind. Just manage it to your plan. Again, if you're trail stopping, you're probably going to get clipped on this thing because you can see it overlaps quite a bit. You may pivot stop as well. You may say, okay, well, you made a lower pivot low here around 244. You could say, well, I'll put my stop in at 240, 244, right in that area. Now, granted, if you got in about 230, 228, it's a dime a share you're making there on holding something, 3 to 4 weeks. But again, it's all relative with regards to your risk. It all comes down to your R's, baby. Risk versus reward, and making sure your reward is typically 3 times your risk at least, if not better, if you can. Okay? So that's the keg situation. It's looking fine. It's still holding here. You may have been in and out. You may be in and out multiple times. I'm out of it at this point, okay, and looking to possibly add or buy the position again in if I see another setup here. And technically, it did hit on Thursday, but I did not take it. Okay, so I took it in here, took profits in this move. Okay, and then like I said, from a day trading perspective, this one is really not something that I like to day trade because it doesn't move much. I mean, there's really not a lot of movement here. I mean, you can see these are pennies, so it just really does not move very much. Okay. Okay, now on Sprouts, I mentioned this prior, and let me kind of show you the entry again, and show you the thought process around how I manage this thing. Here's the move down. Okay, gap down. Look at this volume here, and then the next day it had this little green bar. It gapped up into the red bar and it held this area on pretty good volume considering what it typically does. Okay, and this next day is the day I entered it. We go to the 60-minute chart. You can see here, move down. Lots of volume here. One last drainage. Okay, pops up. Okay, and that's what it looks like on the 60-minute chart going into the day I traded it. Let me show you right here. Okay, so it's right in this area here. All right, so now let's go down to the 5-minute chart and let's move back to those day. Actually, it's the 2-minute chart that shows the entry, I believe. Oops. Okay, here it was on the 2. Okay, it moved up here aggressively and it flagged right here at the whole number, $28 a share. Now, above this $28 a share mark, you'll see right here, okay, there was a nice area to move, a void, because it gapped down. There's a big area of void where it gapped down from the previous day, or 2 days ago, 2 days prior, which creates an ability for it to move more freely with less resistance points. So going to the 2-minute chart, came up here flagged, entry was at 28. Now the first target, okay, typically is the high of this previous candle, $29 a share, okay? And that's what I was looking at, and based on how extended it was from a retracement perspective, and the move, say you just rounded off 34 to 27, it's a $7 move. So you can basically say, a 50% retracement would knock out 350 up off 27. That's 30 and a half, 30. So I was conservative. I said, look, first target's 29, second target's 30. That's what I'm going to look to do to this thing, on this thing. Okay. Now on the 2-minute chart here, you'll see it busted and it ran really nicely. Okay, it ran right up to $29 a share that very same day, a little after the noon hour. Fantastic trade, okay? So my intention when I got into the trade was as a day trade off this pattern, but I liked it as a swing trade as well, okay? So I bought enough lots to cover both, which is I bought a swing trade and a day trade lot, okay, off the same pattern on the 2-minute chart here, okay? So my 2-minute chart pattern, when I got in on my 2-minute chart, my stop was below this pivot, okay, at around 88, 27.80, about a 12-cent stop. But then my other share, and I just bought it on one lot, in a sense, right? My swing trading stop was under the low, which was down here at the pivot low that was made at 27.65, okay? Obviously, lesser shares were bought for that position. Now, when it got to my target, 29, I liquidated the day trade portion of this. Okay, let me go to the 5-minute chart and see if I got the day here. Okay, so here's the 5-minute chart of that very same day. You can see the entry here, it went up, okay, hit 29, came back, and then polished off there. Okay, so by the end of the day, I was out of my day trade, but still holding my overnight shares. The next day it gapped up, and like I said, I believe I tweeted about this, that I was shooting for about $30 on my back piece. Okay, and let me just go to the 15 because 5's kind of taking a while. Okay, here's the 15. Here's the 12th. Okay, the next day it came up, grinded up. The next day it came down, or I'm sorry, gapped down slightly, pushed down, and then turned right around, came up, and then worked its way up on the 15th and actually hit off 30. And there it was. And you notice that's right around near that gap fill as well. Remember 30.50 I said was about 50% off that low. Okay, and if we go back to the 60-minute chart, you'll see, okay, that ultimately it did hit it. Okay, but I got out at 30 because I had made that distinction in my mind, in my plan when I entered this, and so I follow what I anticipated or what my goal was. Okay, at times I'll hold some beyond that target if things are looking really good, but it was kind of grinding out here. It was getting tired, and so I was like, you know what, I'm just going to take my profits on that last piece, on the swing trading, on the overnight trading piece. Okay, and ultimately here is holding up here pretty well. We'll go back to the daily chart. Let me pull up the days. You'll see it's still hanging in this area, but now see this caught up to the moving average. I'm not going to be buying this again right now. Now, if it gaps up in this area as a day trade, yeah, I would entertain it, but not as a swing. Not as a swing. I repeat, not as a swing, because again, it's moved down here quite viciously. It's already rebounded quite well. And the declining moving average caught up. They're coming down. In a sense, this isn't a downtrend, although it may have exhausted itself here on the daily chart. And I try to not go long in a downtrend, typically, on that same time frame, which would be swing on a daily chart. Okay, I'll typically go short if anything. Okay, but if it gets extended in that downtrend, which is what I talked about, and a bunch of my ideas over the last couple months that I've been sharing here, have been things that are extended both on the top side and the bottom side, and playing the normal the rebound. Okay, the oversold, overbought status where it tries to go one way or the other. Okay, where it's going to be, if something's gone up a ton, the amount of people who want to buy it and pay those high prices probably wanes. Okay, unless there's some news that shows this valuation where it's at is not realistic, and that it could be worth a lot more money even if it's extended. And that's where you get extended stuff that keeps going. Okay, but typically when you get stuff that rocks like this and moves in a direction and volume gets capitulative, there will be some sort of bounce. Now going back to CENX, you'll see that here when it did that, okay, there hasn't been much of a bounce. There has not been much of a bounce, which is pretty weak. Okay, it really has not been able to retrace hardly any into this giant void created by this big move, and the moving average is catching up. Okay, so if this thing catches up to this thing, like I said, my lean would be more to the short side, even though I've been watching it long and still am as of this point in time, watching it more as long. I would not short if it broke below, but what I will do is get out of my long position if it breaks this low. Okay, I'm out. I would get out completely and then reassess. It may do one of those things where it breaks down below, stops me out, and then sets up to build and then starts rocketing. And then all you gotta do is it costs you a commission. Get back in if you get your pattern and get your setup. Okay? All right, I hope you found this video helpful and useful. I'm going to be doing some new things coming up here pretty soon. My plan is to, as I scan for ideas every week, I'm going to do a detailed video on my top ideas for the next week. And I'll probably start loading those in here. So I'm going to do that. I'm not going to do it every week, but I'm going to do it on select weeks. So stay tuned, and you will see those videos come in here at some point here over the next several weeks. All right. Thank you so much. Any questions, post them here on YouTube or email me, tom@tomwillardtrade.com. Have a great weekend.